Okay, a very good morning to all of you. Shall we begin? How are you doing, all of you? First of all, tell me that. You can use the chat window. I am seeing the chat here, right here on my phone. Do let me know. How are you doing? Come on, you can type in. All good? Let's begin in exactly 4 minutes, my dear friends, okay? In the meantime, those of you who have joined, please sign on this app, vvox.app, or just scan the QR code which is on your screen. Just scan it. Please scan the QR code. Directly it will take you to the exam. Right? So please do it, guys. Just scan the QR code. This video later I'll see, maybe I'll upload it on YouTube as well. But then what I'll do is I'll edit, because every question I'll give you some time. I'll give you some time of around 1 minute, 2 minutes to answer. So that part I will edit. So the people who are watching it on YouTube later can just pause the video and try to answer. People who are watching on YouTube later don't sit and scan, because this access won't be there. There's a live quiz. So please download this app or just scan the QR code. No need to download the app also. Scan the QR code. Everybody done? Please do it. We begin at 8 a.m. Scan the QR code, my dear friends. So we're going to have fun in this quiz, because I have handcrafted these questions from various case laws, important case laws for the November examination, and from other things as well. So no need to be scared. Okay, so it's okay if you don't even get one question right. It's fine. It's not a demotivating thing. It's just that in your MCQ exam, out of 30 questions, around 10 to 15 will be tricky. Now other 10 to 15 you will easily solve. For that you will do your practice on your own. But where you need my help would be those 15 questions which are tricky. So that's why I thought we'll do this series, whereby some tricky questions we'll be solving, and it will really help you in your examination. Okay, so please join in this app, right in this ID. Kindly join, and then we can begin. So let me give you a couple of minutes more. People are joining in, that's why. Let me give you a couple of minutes more. Please join. Let's begin, my dear friends. First question. There you go. Question number 1. Question number 1. Mr. George, 61-year-old resident of Nepal, earns 11 lakh in India. What is his tax liability? What will be his tax liability? Come on. Start writing. Start doing it. What will be his tax liability? Question number 1. You just have to, what do you say? Click on the answer and just leave it. It will take care of it. Okay? Come on, guys. All of you, come on. Right? Coolly take your time. I will give you some time. $30. Let's see. I've switched on the timer. So later on YouTube, if people are watching, you can pause the video and do it. Cool. So let's close the poll now. What is the answer? Come on, what is the answer? So let us see what you guys have written. So 44.44% people have written 1,48,200, 1,42,500, 1,46,600. Okay, guys. These are all the results. What is the correct answer, my dear friends? Correct answer is, you're right. It is 1,48,200 rupees. Why? Because 3 lakh rupees basic exemption limit is applicable only to whom? Only to a resident above 60 years. This guy is a 61-year-old fellow from Nepal. So will it come or not? No. Very good. Everyone solve this question. Give me a high five. From the screen only, give me a high five. Come on. Awesome. Shall we go to the next one? So correct response, 44.44% people have given the correct response. Awesome. Other people, don't worry. Don't worry about other things. Next question, shall we? Give me a yes there, down. Yes or no? Next question. Let's go to the next question. Yes. Cool. Next one. Mr. Kabali, born on 1/4/43, earns 12 lakh income in previous year 22-23. What is his taxable income in assessment year 23-24? Come on, guys. Come on. Solve it, solve it, solve it. Those who are watching on YouTube later, just pause the video and try to answer this. Come on, answer. Okay, so let's stop the poll. What is the answer? Let's see. So 1,66,469.7 people have told you it is 1,66,400, 1,76,800, 1,60,000, 1,70,000. Okay, so what is the correct answer, my dear friends? What is the correct answer? Second one is a perfect answer. Why? A person born on 1st April would be considered to have attained. See, if it's 1943 for 2023, on 1st April 2023, he will become how many years? 80 years. That is super senior citizen. But here we are talking about assessment year 23-24 or previous year 22-23. For previous year 22-23, what? A person born on 1st April would be considered to have attained particular age on 31st March, the day preceding the anniversary of his birthday. So this was, Prabhu Dayal Sesma versus State of Rajasthan case law, which clearly told that, even though it is 60th year will fall on 1/4/23, you should consider it to be 31st March. Everyone got it? Everybody with me? Good. 69% of you have told the correct answer. Very good. Shall we proceed? Next question, my dear. Very good, very good. Next question. Very simple, very simple, very good. You're doing excellent, awesome. Come on, third one. Answer. Vishnu, a resident, has the following income. 111A, 1 crore 50 lakhs. 112A, 2 lakh 10,000. Other income, 73 lakh. Surcharge rate or rates is or are. How much is it? How much on specified income? So as you know, specified income will be dividend income 111A, 112A, 112, all those are all specified incomes. How much on specified income? How much on non-specified income? Come on, guys, answer. Take your time, no problem. So tell me, what is the answer? Let's close the poll now, right? So for everything, I'm giving you like 1 minute time, guys. It's good enough. So let's see how many of you have answered. Yes, very good. 81.25% have answered that it is 15% on specified income, 15% on other income, right? So let's see the correct answer. Correct answer is definitely fourth one, my dear friends, because it is 15% on specified income. If the total income exceeds, that is, if the total income that is specified plus non-specified all put together exceeds 2 crore, there is a provision whereby the maximum surcharge you can charge is just 15%. The maximum surcharge you can charge is just 15%. So, very good, my dear friends. Those who answered, up top, come on, give me high five. Very good. Those of you who did not answer, it's okay. Think about it. So, there's an entire structure, so to speak. Hold on, let me show that. Let me show that explanation for you. I'll just open my material and let me show you that explanation. So, as regards the surcharge, right? Just a sec. Hold on. Yeah. The question was based on this, guys. You see, total income if it's exceeding 2 CR, where the total income including specified income exceeds 2 crore, not covered in situation 4 and 5. All these are various situations. Total income including specified income does not exceed 50 lakh, then it exceeds 50 lakh but does not exceed 1 crore, like that. But here this is total income including the specified income. In this example, everything was exceeding 2 crore and the rule says maximum how much you should take. 15% on specified, 15% on non-specified. Right. So moving on, next question, guys. Next question. Come on, next question. Next poll, answer. Ooh, it's a big question. Answer. During the assessment proceedings for the assessment year 16-17 and 17-18, assessing officer found that the assessee had advanced huge sums as interest-free loans to its sister concern out of its cash credit account in which there was a huge debit balance. So if they use the cash credit account, and they gave loan to the sister concern. The assessing officer disallowed the proportionate interest. So they were charging interest, disallowed the proportionate interest relating to the said amount out of the total interest paid to the bank. Because I have to pay on CC, right, the interest. So this portion of interest they disallowed, holding that the SSE had diverted its borrowed fund to its sister concern without charging any interest. Come on guys, answer. Take your time, answer. In the exam, basically it's 180 minutes, right, and 100 marks. So, right, you have 1.8 minutes per mark, that's it. So less than 2 minutes you'll have per question. This is all 1 mark, 2 marks, so you'll have just around, if it's a 2 mark question, you'll just have around 3 minutes to figure out stuff. Okay, so let's end this. What is the answer for this, my dear friends? Let's see what you guys have written. Oh, both B and C, 40%. Interest allowed as deduction, 34%. Not allowed as deduction, 25%. Not commercial expediency, 1 person has done that, not even 1 person has done. So guys, what is the correct answer? My dear friends, the correct answer is first one. Interest will be allowed as a deduction. Interest will be allowed as a deduction. It's a case law. SA Builder, Supreme Court case law, very important case law for the exam. On the right hand side, I've given the explanation. Let's see, I'll read out the judgment. The expression commercial expediency is an expression of wide import and includes such expenditure as a prudent businessman incurs for the purpose of business. Expenditure may not have been incurred under any legal obligation, yes, yet it is allowed as a business expenditure. If it was incurred on grounds of commercial expediency. So here, the money was advanced to the sister concern. It was on account of commercial expediency. Commercial expediency means whatever is advantageous commercially. It was very advantageous for the holding company to give it to a sister concern. So they said, when I say using for your business, even giving a loan is also using for your business only. Because in the ordinary course of business, you are using it. So in this particular Supreme Court judgment, SA Builders, they said it is allowed. Got it? So those of you who have written both B and C, think on it, it's a Supreme Court decision. So these type of questions will come in the MCQ. Okay, next question guys. Come on, next question. We'll go to the next question. Question number 5, dear friends. Come on, answer. The SSE company is doing sugar business, borrowing funds at the rate of 20% and lends it to a director at 8%. 20% interest disallowed, 20% interest allowed, 20 minus 8%, 12% interest allowed, 20 minus 8%, 12% interest disallowed. Come on, answer. Okay, so let's end it. So let's see what your answers are, my dear friends. Let's see. Oh, awesome. 20% interest allowed, 12% interest allowed. So guys, what is the correct answer, my dear friends? The correct answer is option number 4. 12% interest is disallowed. Why? Because I'm borrowing funds at 20% and lending it to the director at 8%. Lending to directors is not the business of the company. It is into sugar business. And the borrowing by company in the present case cannot be said to be for the purpose of business of the company. First of all, in Companies Act also under section 185, lending to directors is prohibited. See, in the previous case, lending to sister concern, there will be a genuine reason. That's why they have given that. To sister concern is okay because they will use it in business. Can I use, see, if you're a director, you need loan, you go to the bank and get a loan in your personal name. Why would you use the company's funds? It is not allowed in Companies Act also. And for the director, it will obviously be like a deemed dividend and all those things. All those issues will come. So if you see, cannot be for the purpose. 12% interest is disallowed. This is CIT in the HR Sugar Factory case law. CIT versus HR Sugar Factory Private Limited case law. Because this is an excessive payment to whom? To the related party. So under, even if you see this borrowed funds, I'm paying interest. In that, basically, I'm lending it to the director at 8%. Ideally, I am not supposed to give it to the director only. So 40 capital A2, that also will come here. So all these are important areas, my dear friends. So good, those of you have written the fourth option. Second and third doesn't make sense because you have to recover that. You're recovering 8%. No, so only the excess is disallowed. 40A2, excess is disallowed. What is excess? 20 minus 8. Everybody understood? Yes, these are all tricky questions, important questions. So the objective of this quiz is to ensure that tricky questions are solved, good questions are solved. You will get proper experience in writing the examination. Let's move on to the next question, my dear friends. Come on, answer. Read. Four options. Answer. All right, come on. Let's watch the answer. Let's see what you guys have answered. Okay, 42.42% have gone for both A and B. So basically here the SSC company had taken unsecured loan of 502 crore. Out of the said sum, it has advanced 172 crore to the third parties on which no interest was charged. Interest-free loan they have given. Pursuant to this, the assessing officer proportionately disallowed under section 36(1)(3) an amount of 26.75 crore paid by the SSC. He disallowed it because, they had taken unsecured loan and advanced interest-free loan. So what do you think? Again, it is based on a case law, my dear friends. Let's see the correct answer. The correct answer is option number 4. Correct answer is option number 4, my dear friends. So the High Court observed that nearly, what is the fourth option? None of these. So here, what is the option? Part of the interest paid by SSC on unsecured loan is disallowed. Out of the said loan, the SSC had advanced a certain sum of money. Non-interest bearing advances were given to third party. So the test of commercial expediency was not satisfied. No. So basically, High Court, merely because it was non-interest bearing security, it does not mean that commercial expediency was not sufficient. Interest-free loans were given to these people. Money taken was not diverted. I just took the loan and I gave the loan. It is not like diversion of my funds in any way. Unsecured were not used for personal purposes. Correct? So the thing was diversion. When will it happen? In the previous question. Previous question, it was diverted to directors. That is personal expense. So business loan taken for personal purposes and it was diverted to personal purposes. Here, it was not diversion. I gave it to third parties who used it in their business. Therefore, interest paid on capital borrowed for the purpose of business had to be allowed as a deduction. It's a Delhi High Court judgment of 2018 in Reebok India Company. Reebok India Company case law. Important. So guys, I have hand-picked those case laws which are important, which are confusing, so as to give you the best possible scenario. Okay. So most of you here got it wrong. It's okay. Are you learning? Are you liking it? Yes or no? Come on. Chat in the chat window. Come on. High five. It's okay if it's wrong. Don't care about it. In the exam, you will do well. Are you liking the quality of the questions, my dear friends? Come on. Chat in the chat window. Let's see the leaderboard till now. Let's see the leaderboard. Good. Anushri, Madhavan, you guys are doing well. Other people, come on. Good. No problem. Next question. Are we ready? Question number 6, my dear friends. Question number 6. Come on. Sorry, 7. We are in 7 if I'm not wrong. Yes, question number 7. Answer. Patient who was treated in the year 2014 by a surgeon was completely cured of his ailment and a sum of 2 lakh was paid as professional charge. Right? Later in 2023-24, patient executed a will by which he gifted a land valued at 1 crore, indicating therein that the gift was made in order to show his feeling of gratitude. So this fellow in 14, he did the operation, he gave the money, all close. Later, he gave 1 crore, indicating sense of gratitude. Upon the demise of the patient, the doctor received that 1 crore asset, guys. Come on. Answer. This income of 1 crore, chargeable under PGBP, chargeable under IFOS, either A or B at the option of the SSE, income not chargeable to tax. Come on, answer. Come on, guys, this is an easy one, quickly. What do you think? So let's end it. Easy question. Income chargeable under IFOS, income chargeable under PGBP, income not chargeable to tax. Wow. Answer, my dear friends. It is option number B, income chargeable under IFOS. Because value of the benefit or perquisite, whether it is contributed in money or not, arising from business, shall be under PGBP. There has to be a nexus. What is a nexus? There has to be a nexus between what you received and what you gave. He gave services, professional surgeon, but then he received 2 lakh already. This 2 lakh is already done now, done and dusted, 2 lakh. Then later 1 crore, whatever he gave, that is, there is no nexus between the business. Because I like that person, that's why I gave. So there is absolutely no nexus. Fee of 2 lakh has already been paid. So there is no problem. So there is no nexus. Hence, the same will be dealt under IFOS 56-210. It will come. So option number B is the answer, my dear friends. Okay, easy. Come on, moving on. Next question. Go on. Question number 8. Mr. A buys an asset worth 10 lakh rupees from Mr. B by paying 3,50,000 by check, 2,50,000 by ECS, cash of 10,000 per day for 30 days. On the 31st day, 5,000 rupees at a time, 20 times on the 31st day. Consequence of Mr. B is, come on, guys, easy question. Come on, answer. Coolly read, no problem. There are many people who have come on YouTube live, but the ones who are attending the quiz are, less compared to that. Why? Come on. Attend the quiz, my dear friends. It's going to be fun. Are we done? I'm very interested in knowing how many of you get this right. Last 30 seconds. Quick. Okay. 40A3 disallowance of 1 lakh, 40A3 disallowance of 4 lakh. Guys, first of all, in 40A3, what is it? You should have taken what? You should have paid cash more than 10,000 to a person in a day. 3 lakh 50 by check, no problem. 2 lakh 50 by ECS, no problem. Cash of 10,000 rupees per day for 30 days. No problem. 10,000 rupees per day. And 5,000 rupees 20 times a day, 1 lakh. Now this is a problem. So, by the way, 40A3 is for an expenditure. Here I am buying an asset. So 40A3 will not come only. Those of you have written 40A3 disallowance of 1 lakh, wrong. This is not an expenditure. This is not a revenue expenditure. It's a capital expenditure. So generally capital expenditure will be deducted from the actual cost under 43(1). So those of you have written option 1, 100% wrong. Why? This is not a capex. Those who have written option 3 also 100% wrong, guys. They are asking the consequences of for Mr. B, sir. Not for Mr. A. Mr. B is whom? The owner of the asset who is selling the asset. Please read the question carefully. They'll tell no. Please read the offer documents carefully before investing. This is what? Please read the question carefully before answering. Right? So, guys, this is for the seller. My dear buddies, for the seller, if a transaction more than, 269 ST and all will come, other sections will come, 269 ST and 271 DA. Under 269 ST and 271 DA, if you are taking cash in a single transaction, what is the transaction here? 10 lakh rupees. And cash you are taking more than 2 lakh rupees here. Where? 5,000 into 20, 1 lakh over. Here, 10,000 into 30, 3 lakh over. 269 ST will come. 269 ST, I'll show you. Hold on, let me show you. See guys how they are asking. This I have only created, but they'll ask like this. They'll ask like this. You should be very, 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 very careful, my dear buddies. Extremely careful in doing your stuff. Like, should be very careful, trust me. Later, no, it's going to be a huge problem if you goof up in this. So, kindly ensure that you're writing it properly. So, I'll just show you your 269 ST. I want to show you that. Mode of undertaking transactions, you see. Any person in the aggregate single transaction electronic mode, if you take, then it is a problem. Electronic mode as may be prescribed, amount of 2 lakh rupees or more. 2 lakh rupees or more if you take, gone. Here 2 lakh rupees you have taken in the transaction, no? Yes or no? 1 second, what happened? Right? What is the 2 lakh rupee transaction here? Yes. 10,000 into 30, 3 lakhs. Then 5,000 into 20, 1 lakh. 4 lakhs I have taken. So for him, 269 ST and 271 DA. Under 271 DA, fully what, because it's more than 2 lakh, the penalty under 271 DA will be the amount of this thing, amount, 4 lakh rupees will be gone for him. Penalty he has to pay. Deadly question. Please be very, very, very careful, my dear friends. Please be very careful. Okay, cool. Next question. Question number 9. Where an SSE carries on business or profession in a building not owned by him, any capital expenditure incurred by the SSE for the purpose of business or profession on construction of any structure, renovation or extension of the building. So I am a tenant, but I have constructed one more building. That capital expenditure, what's the treatment? Come on, answer. Answer, come on, let's close the poll. Yes. Can be claimed as an asset and depreciation is allowed. Excellent. Why? There is a concept of deemed building. Under the concept of deemed building, yes, you are a, tenant, but still you can take it as an asset. Depreciation can be claimed. Simple question. Very good. Moving on. Question number 10. Answer. This is a good one. Just 2 options. Read. ICDS Limited, who's the SSE, a non-banking finance company, is engaged in the business of hire purchase, leasing and real estate. SSE purchased vehicles from manufacturers by making direct payments and entered into lease agreement for the vehicle with the customer. The vehicles were registered in the name of the lessees as required under provisions of Motor Vehicles Act 1982. In its return of income, SSE claimed depreciation on leased vehicles on the basis that it was the owner of the asset. It was the owner, it leased out to others, but the registration was done in the name of others, not in your name. So it's very simple question. The vehicles were registered in the name of the lessees and were used by them. SSE was not eligible for depreciation under 32 since it was neither the owner nor it had used the vehicles for business, which means it is not allowed. In the second case, since it's a leasing company, leasing would be for the purpose of business and depreciation can be claimed. It's either this or that. Very simple answer. Right. So what's the answer? Come on. So guys, the answer, what you have answered, let's see. So 16.67% have told depreciation cannot be claimed, whereas a whopping 83% of you have told it can be claimed, and the correct answer is option number B. You're right. So guys, in this case only, ICDS limited case, they clearly told it's a leasing company. Leasing would be for the purpose of business, which means you have used it for the purpose of business and hence it can be claimed. Okay. So option 2 is the correct answer. Very good. Moving on. 10 questions done. Let's go to the 11th question now. Krishna, commission agent, had transactions with Mr. Martin, a non-resident. Due to certain defaults by Martin under the income tax law, Krishna was treated as an agent of non-resident under 163 and a tax of 5 lakh rupees was levied. Krishna could not recover this amount from that fellow, from the foreigner. Can be claimed as trading loss, cannot be claimed as trading loss. If recovered later, will be taxable under 41. So both A and C. Why? I will claim 5 lakh now. Tomorrow if I recover, whatever recover will be taxable under section 41, deemed profit. Come on guys, answer. Yes, very good. So let's see guys, answer. Both A and C, 47% have told cannot be claimed, 36.84% have told. Let us see. Answer is option B, my dear friends. Sum of 5 lakh borne by Krishna as the agent is a statutory liability of income tax and it is not an expenditure incidental to carry on business. He is a agent. So statutorily he has to pay 5 lakh rupees because he is a commission agent of a non-resident. He is deemed to be an agent and if he defaults, it will be an SSE in default. The liability is with reference to the business of a non-resident. So Krishna has not incurred anything in carrying on any business, but it is a tax liability, which is statutory liability. It is a character of trading loss and the amount claim is inadmissible. Supreme Court judgment in Indian Aluminium and Company versus Commissioner of Income Tax. See how it is. Now in the 269 ST wala question, Nitish has a doubt. Section 269 will be attracted on receipt from a person in a single day exceeding 2 lakh. In question number 8, person receives 1 lakh on the 31st day. Seller is not attracted here. Nitish, read the Bare Act, buddy. Let's read. Come on. You know, Bare Act is so awesome that when we do it now, we'll understand how important it is. Good question that you asked. Let me take you to the Bare Act. Hey, nonsense. See here. Here I hope you can see. No person, on the side I hope you can see, no person shall receive an amount of, here, no person shall receive an amount of 2 lakh rupees or more in an aggregate from a person in a day that you leave, or in respect of a single transaction. This is a single transaction of what? Buying an asset. Transaction is selling an asset here. Transaction is not collecting money every day. In a day is first question. Then it says or. I hope you understood. Or in respect of a single transaction. So this is a single transaction of 10 lakhs. That is why it is very much applicable. Got it? Yes. Moving on. So good. Those of you have, majority of you have got wrong, gone wrong in this particular question. Moving on, guys. Come on. Next. It's okay. It's okay. That is why this entire series is there. That's why for that only. I hope you are enjoying. Next. In accordance with the Articles of Association of Infosys Limited, a member of the company is liable to pay interest at 15% on any calls remaining unpaid. That is, unpaid calls 15% have to pay from the appointed date of actual payment. Company has received 5 crores as interest from its members under this provision. Now that 5 crore, is it capital receipt not taxable? Is it a receipt which can be foreseen, known, anticipated and provided for in the Articles of Association? Is it 5 crore, is it taxable or is it both? Both. It can't be C and D, guys. It is actually B and C. Sorry. The fourth option, let's change it. It is B and C. It can't be C and D, no, because that's the D option. Okay, both B and C. Make it both B and C. Fourth option, both B and C. Got it. Right. Answer. Right. The intention of this quiz is to ensure that you guys get adequate practice, those of you writing in November, and also to understand how important it is to read the Bare Act. It is gone are those days when you just read some summary stuff and vomit in the exam. Won't work that way. I've released my marathon part number 1, where I've covered, as much as possible in depth. Check it out. Sir, now you stop talking, sir. I'm concentrating on the question. Okay, sorry. Shh. Sorry. Answer. Are we done? Go on, guys, quickly. Okay, 5 crores receipt, capital receipt not taxable, some say both B and C. Correct answer is both B and C, my dear friend. See, again, majority of you have got it wrong in this particular question. So you guys have got it wrong in this particular question. Merely because interest is paid on the delayed payment of share capital, interest receipt cannot be considered as capital receipt. Interest is definitely chargeable to tax, because the liability to pay interest was clearly provided and foreseen, known, anticipated, everything in the Articles of Association. The receipt of interest is neither accidental nor fortuitous. You are not getting it out of any, luck. It's not out of any fortitude. It is not luck. So it is a receipt which can be clearly crystallized, foreseen, known, anticipated. So you should provide for all those known items. Hence, it is taxable as revenue receipt. Kolkata High Court judgment, Asiatic Oxygen versus Commissioner of Income Tax. Good decision. So the answer is 37.14%. Have given the correct answer. It's okay if you're wrong, buddies. Do not worry. The exam is there only for that, to ensure that you go wrong. Good, no problem. Next question. Gajendra has 2 lorries at the beginning of the year used in transport business. WDV has on 1423 of lorry Champa is 7 lakh and lorry Chameli is 5 lakhs. Sir, what name, sir? Yes. During the year, lorry Gajalakshmi is purchased on 10/12/23 for 10 lakh rupees. Rate of depreciation is applicable 30%. On 28/3/24, lorry Champa is sold for 8 lakh rupees. Determine the amount of depreciation available to the SSE for assessment year 24/25. Depreciation is 14 lakh. Depreciation you have to compute. Answer. Come on. So guys, what were the assets there? Champa and Chameli were there. you added Gajalakshmi. When did you purchase? 10, 12, 23. That is less than 180 days. So I hope you checking all those things. Come on, guys, quickly finish it off. Done. Stopping it now. Let's see. 2,70,000, 67% of you got. 4 lakh 20, 14 lakhs. Thankfully, nobody has done that 14 lakhs. Answer, my dear friends, you're 100% right. 2,70,000 rupees. Why? First it is 7 lakh, then you add 5 lakh, 12 lakh. Right? In that 12 lakh, then one more is added, no? 10 lakh, 22 lakh. And in that, lorry champa is sold for 8 lakh. 22 lakh minus 88 will be 14 lakh it will be. But amount of depreciation now, because champa is, this new Gajalakshmi is bought less than 180 days. So for that, you will get half depreciation. And for the remaining 4 lakhs, you will get full depreciation. So for 10 lakhs, you will get half depreciation. And then remaining 4 lakhs, you will get full depreciation. So 10 lakh into 15% is 1 lakh 50,000. Then 4 lakh into 30% is 1 lakh 20,000. So 1 lakh 50 plus 1 lakh 20 will be 2 lakh 70,000 rupees. Easy. Come on. If a new asset was purchased for a manufacturing company in July. So in the previous question, unless they have given about 44 AE, no need to do all that. They are talking about depreciation, so no 44 AE there. Anyway, if a new asset was purchased for manufacturing company in July 2021 for 10 lakh and but put to use only in December 22, depreciation rate is 15%. What is the depreciation? Come on, guys, answer. New asset was purchased July 21 and put to use in December 22. All right, that's good. Let's see. 40% I've told no depreciation for 21-22. For 22-23, depreciation will be 75,000. The question here is, will you get additional depreciation of 20%? Is the question. What do you think, guys? Correct answer is option number 3. Additional depreciation you leave, but is it full depreciation or half depreciation? That's the question. Additional depreciation, they are not told about whether it's machinery and all that you leave. But I'm talking about, is it half rate of depreciation because it was put to use in December 22, or whether it is full rate of depreciation of 15%. No depreciation for 21-22, and for 22-23 it will be 1 lakh 50, that is full rate or half rate. Guys, half rate of depreciation is used only for that previous year in which the asset was acquired and put to use. The law is very clear. It should have been acquired in that year and put to use in that year. The word that is there in the Bare Act. Here it was acquired in 21-22, but put to use in 22-23. So there is no half depreciation. It is full depreciation because of the use of the word that. Now these are the tricky questions. Right? Moving on. Question number 15. Answer. Mr. Anuj. purchased a building for 20 lakh on 25th December 2017. On 17 September 2022, he brought this building into business. In this case, the actual purchase price of the building will be reduced by the notional depreciation charged on the building for the period 25th December 2017 to 17 September 2022 at what rate of depreciation? Come on guys, answer. Those who will be probably watching this on YouTube later, you can just pause the video and answer, because I will not waiting time and all. I'm asking my team to edit it off. Waiting time I'm not going to give, so you can pause it. Now you guys, you're live. Please do it. Answer. Yes. Answer guys. What rate should I charge depreciation? Rate of depreciation as on 17 September. That is when I brought it into business, or rate of depreciation as on 25th December when I initially bought the asset, or rate of depreciation every year. Like 17 there will be one depreciation, 18 there will be maybe a different rate, 19 different rate, or I should take average rate. So my dear buddies, let's see. Most of you, what you have told. You have told rates of depreciation in force every year. Rate of depreciation as on 17 September. Higher percentage I have told rate of depreciation in force every year. The correct answer is option number 1, guys. This is explanation 5 to section 43(1), which says building which has been used for private purposes subsequently brought into business. Actual cost is cost of purchase or construction, that is 20 lakh, as reduced by the notional depreciation calculated at the rate in force on that date. On that date means what? The date you bring it into business, 17 September 2022. If you open explanation 5 to section 43(1), it is very, very clear. On that date, which date? The day you bring it into business. So 17 September date you have to take. So in 2017, if it was 10%, 2018 it was 15%, 2019 the depreciation rate was 5%, I don't care. I should take it as on the rate as on 17 September 22. As on 17 September 22, it is, let's say, 5%. I'm just giving an example, 5%. So you should take the entire depreciation 5% from the beginning only. Correct? The law is abundantly clear in this aspect. Okay? Cool. So 15 questions are done. Let's check out the leaderboard just to, have that sense of competitiveness. So Anushri, number 1, Jayant, number 2, Kirutika, Nitish and Sairam. You have scored 10 out of 15. Others are doing well, no problem. It's not comparison, but yes, Anushri, I've got 13 out of 15 correct. Come on, others catch up, guys. It's okay, even if you're not done well, it's okay, guys. It's just a simple, funny, nice competition, just to bring that sense of competitiveness. It's a very healthy thing. Okay, moving on. 16th question. Mr. David, non-resident, purchased a machine for 20 lakh on 25th December 2017 in London. On 17 September 2022, he brought this machine into his business in India. In this case, actual purchase price of the machine will be reduced by the depreciation charged on the machine for the period 25th December 2017 to 17th September 2022 at what rate? Come on, answer. Come on. So guys, let's see what you guys have answered. Actual cost 20 lakh, no depreciation. Depreciation rate of each year, depreciation 17 September. Guys, correct answer is option number 3, depreciation rate of each year. This is not explanation 5, it is explanation 11. Why? Non-resident bringing it into India. Asset brought into India by a non-resident SSE for his business or profession. Actual cost is purchase price 20 lakh as reduced by the amount of depreciation notionally calculated at the rate in force in India since the date of acquisition. Rate in force. They don't use the word rate as on that date. They use the word rate in force. Rate in force means what? Every year, whatever the rate was there, I need to take. So depreciation rate of every year I need to take, my dear friends. So see, each explanation they will test you like this. I'm not kidding, right? These questions are framed by me, purely reading the past trends, what they're asking people what they've been asking. So it is not going. See, I told you out of 30 questions, around 10 to 15 will be tricky. Now these are only the tricky areas. I'm not all are tricky. Some are easy also in this. Now I'm not put any tricky questions. These are all. If you had read the law properly, you will be able to answer. It's okay. Don't worry. Don't worry about it. I'm not saying you haven't read. You would have read, but the thing is, it's difficult to remember many things. So it's okay. That's why the practice is very important. Yes or no? Do you agree? Moving on. Next question, guys. Come on. So hope you are liking the questions, the quality of the questions. It's making you think, and it is, you're helping. It's good for you to spend time on this. Mr. Anu's purchased a machinery of 20 lakh on 25th December 2017 for private use. On 17 September, he brought it into business. Actual cost is 22-23 will be rate in. Actual cost will be what? Depreciation rate in 2017 is 10%, and 2022 it's 15%, and additional depreciation rate is 20%. You should calculate. Calculate, guys. Come on. Are we done doing? Any expenditure incurred for increase in share capital is capex. Same is disallowed and taxable. Any income in respect of increase in capital is treated as capital asset? Yes. You're right, Karthik. Can be done like that. But generally, you should see the AOA to think about what will be the treatment. Varagunan, it is not number of days and all. It is just 180 days, half rate and all those things. That one. Half rate question will come only if it is acquired and put to use in that year. If you bring it into business after 5-6 years, half rate scene will not come. Here, guys, answer. Come on, let's see. 35.48% of you have told 8,20,854. 100% wrong. Answer is 20 lakh. Because, guys, explanation 5 to section 43(1) applies only to building. Sir, what to do? That is the law. Explanation 5 at rate in force on that date will apply only to what? Building. Here, what is brought in? Machinery. So, full 20 lakh will come into the picture. Understood? Yes, guys, full 20 lakh will come. So, you would have done all calculation using 10% and 15%, then some of you would have done additional depreciation also. No, it is 20 lakh is the answer because machinery is brought in, actual cost, full will come, right? See, anything they can ask in the exam. An asset was purchased at 5 lakh as per the scheme of manufacture of tea in previous year 23 and was transferred in previous year 24 for 9 lakhs. Tell me, what is taxable? 5 options are there. Come on, guys, answer. Quick, quick, quick. Yes. What is the answer? 53.13% I've told you both A and B, that is 5 lakh taxable as PGBP, 4 lakh as capital gain. Let us see. Correct answer is last option, which only 21.88% have got, both B and C. Since the asset was transferred in previous year 24, deduction claimed in previous year 23 on purchase of asset shall be treated as business income. This is under the T development account, 33 AB and all those things. So because its transfer is done in less than 8 years. 8 years you should keep it. If you don't keep it, all the deduction that you have claimed will be reversed. In previous year 23, guys, but it is tea, manufacture of tea. So 60% is agricultural income, 40% is business income. That is most important. So in that 5 lakh, 40%, only 2 lakh would have been allowed. So now recovery is how much? 2 lakh. So 2 lakh will be taxable as PGBP and 9 minus 5, 4 lakh will be taxable as capital gain. Deadly question. Right? This is manufacture of tea. In tea, it's very clear, 60% is agriculture, 40% is business. Correct? Yes. Yeah, me no, actually that was an error in that question. Yeah, it's actually machinery only, not building. Sorry. I got your point. Okay, it was an error in the machinery is brought in, not the building. Cool. Next, moving on. Yes, M Limited purchased a license for 10 lakh rupees. Life of the license is 10 years. License was sold in the 4th year for 15 lakhs. Business income and capital gain are respectively. Answer. Answer, guys, come on, quickly. License 10 years. Entire license was sold in the 4th year for 15 lakhs. What is the business income? What is the capital gain? 4 lakh and 5 lakh is what you have told majority. And the answer is 100% right. Least of the following shall be chargeable, my dear friends. That is sale price minus unamortized amount. So it's in the 4th year it is sold. So 4 lakhs would have been amortized already. What is unamortized amount? 6 lakh. So basically, what is the deduction claim till date? 4 lakh. What is sale price minus unamortized amount? 15 lakh minus 6 lakh. So 9 lakh. 9 lakh or 4 lakh, whichever is less. So which is less? 4 lakh. So 4 lakh will be my business income, whereas capital gain will be 15 lakhs minus 10 lakhs, 5 lakhs. So this is my income from business or profession and capital gain with respect to license. Good. Many of you have given the correct answer. Question number 20. Vimal Limited, a tobacco manufacturer, invested 2 CR in acquiring machinery for scientific research in organic tobacco and incurred 1 crore as revenue expenditure towards the same. Deduction under 35 2AB would be as follows. Answer. Come on, guys, be a bit quick. So 35 2AB is what? For certain businesses, right? Remember? So will you get for 2 crore and 1 crore or only 2 crore or only 1 crore? What do you think? Will you get for capital expenditure, revenue expenditure? Answer is, let's see. Wow. 35.29% have told 3 crore. 35.29% have told none. Of the two, 135.29% is right. Which one is right? Option number 4, my dear friends. Guys, deduction in case of companies engaged in the business of manufacturing other than something mentioned in the 11th schedule. The first item mentioned in 11th schedule is tobacco, Vimal, Bolo, Zuba, Kesri. Ajay Devgan, like this, he'll hold no. Guys, it's 11th schedule. These are the basic things that you should know. Tobacco, alcohol, etc. Why will I give for scientific research deduction for you? Because these are harmful items. These are the things mentioned in the 11th schedule. So that is why you will not get any deduction. None is the answer. Got it? Interesting question. Moving on. Bharat Biocon Limited invested 4 crore in acquiring land for biotechnology research, incurred 3 crore for building, 2 crore for machinery, and 1 crore for research. Reduction under 35 2AB would be answer. This is question number 21 that we are speaking of. Come on, guys. Answer. Thank you, buddy. Glad you liked it. Are we done? So the answer, my dear friends, what you have written. Wow, 6 crore. 6 crore means what you have done? You have done building, machinery, and this thing. Okay, 10 crore, some of you, 3 crore, some of you have told. Correct answer is 3 crore, my dear friends. Because under 35 2AB, land and building not allowed. Under 35 2AB, land and building not allowed. Conditions are SSE should be a company. SSE should be deduction in case of company engaged in the business of biotechnology. Third one, except land and building. And the item should be other than 11 schedule. So in this particular question, it is 38.24. 3 CR is the correct answer. Very good. Those of you have got it. Let's see the leaderboard till now. So two people are number one now. Anushri and Nitish going hand in hand. We have Geetanjali, Mohan, Srikant and Jayant. Here, others are doing pretty well. It's okay, I'll not go and read all the names. Fine. Anushri and Nitish are in number one. They've got 14 out of 21 right. Good. Others are also good. Very good. No problem. Next question, guys. Come on. Plant of 3 crore used in Netherlands for 2 years was brought into India by NSE for the first time ever and was used for laying and operating a slurry pipeline for the transportation of iron ore. Choose two options which are correct. Guys, different way. Two options are correct in this. Choose the two which are correct. Answer. Alright, guys, come on, answer. Two options are correct in this. Two options. Come on. Done. So let's see what you have answered. Of course, it will be a mixture of, because you're answering two questions. So guys, the correct answer is A and C. Because plant and machinery transferred to a specified business must be new, except in the following cases. If the plant and machinery is brought into India, it is deemed to be new. So 3 crore can be claimed as a reduction if 35 AD is opted by the SSE. And if 35 AD is not opted for, then no deduction on account of depreciation is allowed in respect of such machinery earlier than the date of installation. So guys, basically if your 35 AD is not opted for, then it's not a new machinery. In additional depreciation case, what are the conditions? It should be a brand new machinery, and even if it is imported from outside India, it is not deemed to be new, and hence additional depreciation cannot be claimed. But in case of 35 AD, there's an exception. Even if it is a asset brought from outside India, even though it has been used before, it is deemed to be new. So if 35 AD is opted for, 3 crore can be claimed. 35 AD is not opted for, depreciation can be claimed, but additional depreciation cannot be claimed. Got it? Muthukumaran, as per 3514, building 100% can be taken for 35 2AB. No dear, please go to 35 2AB and check. It is very clearly given, not being an expenditure on land and building. Specific section under 35 2AB will override general section under 3514. Please read the whereat. Okay? That is why those tricky areas only I have picked. Moving on, Just Started Limited gives you the following details: 20 crore building, land 20 crore, building 30 crore, leasehold 10 crore, plant and machinery 25 crore, furniture 5 crore, fittings 5 crore, share capital 25 crore, debentures 15 crore, long-term borrowings 10 crore, share premium account 30 crore, expenditure on development of land and building 5 crore, preliminary expenses 7 crore, overall deduction under 35D is, take your time, 2-3 minutes, coolly take your time and write down. Solve this, guys. Very interesting question. Solve. Come on, take time. 3 minutes I'll give you. Take time, no problem. Solve it right now. That's good enough time. I've given you 3-4 minutes. This is section 35D. Let's see what you guys have answered. Oh, 4.75 crore, 5 crore, 7 crore. Overall deduction. Correct answer is 5 crore, my dear friends. 5% of the cost of project or 5% of capital employed, whichever is higher. Capital employed means what? Aggregate of share capital, debentures, long-term borrowing. Share premium account should not be taken. So it is only 25, 35, 40, 50, 50 crore. 5% of 50 crore is 2.5 crore or 5% of cost of the project. What is cost of the project? All the assets: 20, 30, 50, 60, 75, 80, 85, 50, 60, 85, 90, 95, 95 crore. And also this one, expenditure on development of land and building also should be added. Total 100 crore will come. So it is 5 CR or 2.5 crore, whichever is higher. It is 5 crore. And then that 5 crore or preliminary expenses 7 crore, whichever is lesser, which is less, 5 crore. So 5 crore is the answer. Hope you got it, guys. Interesting question. This is a numerical, right? Moving on, last few more questions, we are done. Come on, answer. It's a very interesting case. United Exports was a partnership firm engaged in the business of export of rice. A return of income for the year 2004-5 was filed on 1/11/2024, 2004, clearing a total income of 87,47,807. Profit and loss account filed with the return of SSE firm had debited an amount of 1 crore 2645,614 on account of 11% trading discount allowed to its sister concern, which was 11%. For others, trading discount was just 3%. SSE felt discount was in conformity with the discount given in earlier assessment years. SSE felt that it is normal market practice to give bulk discount to customers, regular customers, and sister concern was a customer. Gross profit of the SSE firm had gone up from 18.5% to 19.6%. Profit also has increased, so whatever expense also will increase. AO can disallow 8%, that is 11 minus 3. AO can disallow up to 8%. So you can disallow any amount, but up to 8. AO cannot disallow any amount, none of these. Answer. Technically, only 3 questions after that. After this, only 3 questions. Come on, hang in there. Okay, guys, moving on. Let's see what you guys have answered. Given you good time, couple of minutes. It's enough for this question. So whenever it's needed more, I'll give. But these questions are, it's direct, straightforward. Let's see. So around 47% of you have told up to 8% you can disallow. So the answer, my dear friends, is option number 3. AO cannot disallow any amount, where 29.41 of you have got it correct. So it pertains to disallowance of the expenditure, that is an amount actually spent. What can you disallow? An amount which you have actually spent as an expenditure. The expression used in the provision is incurs any expenditure in respect of which payment has been or is to be made to any person. Incurred any expenditure. Emphasis clearly shows that actual payment must be made and there has to be an expenditure. Trading discount. In a trading discount, there is no expenditure, is what the court ruled. And it is just a trade discount, it is not an expenditure, so it cannot be disallowed under 40A2B. Under 40A2, the wordings are disallowance with respect to an expenditure which is made. Expenditure which is made. Here there is no expenditure, just a discount given. Out of 100, 20 discount I will give trading discount and 80 I will collect from you. It is not an expenditure. This was held in this particular case. United Exports case, important case it is. United Exports. Very important case which laid down the foundation of 40A2. What do you mean by expenditure incurred? Moving on, guys, 25th question. Solve. A Limited issued 10,000 ZCBs at 200 rupees per bond on 14/8/22. Amount paid on redemption of such bond is 300 rupees. ZCBs are redeemed after 1 year. Discount allowed as a reduction for previous year 22-23 is as follows. Answer. Calculate and tell me. I'll give you 2 minutes. Calculate fast. Right, guys. So let's see what you guys have answered. You have answered 66, 6, 6, 6, 6, 6, 7, 10 lakh. Some of you have answered, and the correct answer, my dear friends, you're right. 6,66,667. Discount on ZCB is how much? 300 minus 200, that is 100 rupees. 100 rupees into 10,000 ZCBs will give me 10 lakh rupees. So first is number of calendar months over which the discount is given. So it is basically 14th August 22 to 13th August 23. So 12 months. Months in the year 22-23. So if it is less than 15 days, you should ignore it. More than 15 days should be considered as a month. So August 22 is considered as, it's ignored. So basically September, October, November, December, January, February, March. And if it is, more than 15 days. Why? If you see, it is issued where? 14th August. So from 14th August to 31st August, it is more than 15 days, right? So because 14th August to 31st August, it is some 16-17 days, it is considered as 1 month. So August, September, October, November, December, January, February, March, 8 months. So 8 months you will consider it. So 10 lakh divided by 12 per monthly discount is 83,333. So 83,333 into 8 months will give me 666, 667. Very good. Those of you have answered good. 10 lakhs is wrong answer, guys. Be careful. Next. Yes. Mr. A claimed total debt of 6 lakh rupees. The assessing officer allowed only 4 lakhs in the given previous year. Remaining 2 lakh was disallowed. Subsequently, many years later, 3.5 lakh was recovered. What is the amount of deemed to be income under PGBP under section 41 is the question. 3.5 lakh, 1.5 lakh, 4 lakh and 2.5 lakh. Alright guys. So let's see what you've answered. 1.5 lakh is what 60% of you have answered. And yes, you're 100% right, that's correct. Because what was allowed was only 4 lakh and what was disallowed was 2 lakh. And today the recovery is how much? 3.5 lakh. So your allowed only is 4 lakh and recovery is 3.5 lakh. Overall amount is how much? 6 lakh. What was disallowed? 2 lakh. So out of that recovery 3.5 lakh, whatever was disallowed, you should adjust it off first only because that is not taxable. It was disallowed means you had paid tax on it already. 3.5 lakh you're receiving. In 3.5 lakh on 2 lakh you have already paid tax because it was disallowed. So what is the balance amount? 1.5 lakh. Only 1.5 lakh will be taxable under 41(4). Very, very simple. Simple question. Okay guys. Deadly question. Last question. You can zoom in on this. This is, you take 3-4 minutes. This is whether tax audit under section 44AB will apply or not apply. This is the entire set. Whether tax audit will apply or not. So you can zoom in. So basically there are 12 options, to be honest. It's not going down here. You will see 12 options. So in question number 1, is it a yes or is it a no? Question number 2, yes, no. Question number 3, yes, no, like that. So 6 answers you have to write. In question number 1, either it's yes or no, 2 yes or no, 3 yes or no, 4 yes or no, 5 yes or no, 6 yes or no. So if you click on it, you will anyway get to know it. Check it out. So this is sales, this is purchases, tax audit applicability as per 44AB. Take 3-4 minutes, coolly answer each question. 6 answers should be written here. 12 questions are there. So in each question, question 1 will either be yes or no, correct? So in question option number 1, option number 2, it will either be a yes or a no. So don't write no. If it's a yes, it's a yes. If it's a no, it's a no. If you have answered yes, then this you should ignore. I hope you got it. Very simple. 6 answers you have to write overall. Come on guys, start. I'll give you time. Take your time, no problem. Yes, I think that is good, sufficient time for all of you. 4-5 minutes I've given. So let us see what you guys have answered. Let us see the correct answer, my dear friends. In question number 1, let's see. See guys, the gross sale is how much? Other modes it is 7 crore and purchases through other mode it is 6 crore. So gross sales exceed 1 crore but does not exceed 10 crore. Hence in this 44AB will not come. So question number 1 correct answer is a no. Second one, gross sales is less than 1 crore. 45 plus 45 less than 1 crore. So will it apply or not? Tax audit will not apply. No. Third one, gross sales exceeds 1 crore. Exceeds 1 crore. Here purchases is 1.25 crore. But if you do the percentage, 1 crore by 1. What do you say? 1 crore is in cash, 1.2 crore is in other modes. So overall sales is how much? 2.2 crore. What is the tax audit provisions? Up to 1 crore, I mean more than 1 crore tax audit will apply. But that 1 crore limit is extended to 10 crore if the cash purchases and cash sales is less than 5%, right? So in this, what is the overall sales? 2.2 crore. So 2.2 crore, no tax audit only if cash sales is less than 5%. But if you do 1 crore divided by 2.2 crore, it comes up to some 45%. So definitely in third case, tax audit will apply because the limit is not extended to 10 crore, limit will be only 1 crore. Fourth one, you see, other modes, 2.25 crore, cash 5 lakhs, overall 2.3 crore. Here it is 1.2 crore and 50 lakhs, overall 1.7. And if you do the math, this will be 5 lakh divided by 2.3 crore, around 5%. This is 50 lakh divided by 1.7 crore, which is around, I guess, around like 29, 28%. So definitely tax audit will apply. Next, 1.25 crore and 12.5 crore. Since it goes beyond 10 crore either way, tax audit will apply. Last case you see, 4.25 crore and 5 lakh. Overall 4.3 crore. So 5 lakh divided by 4.3 crore is around 1.16%. Then 6 lakh divided by 4.06 crore again will be less than 5%. So this is the last case in which tax audit will not apply. It will not apply. Got it? So this is how it is, my dear friends. So two more quick questions are there. This is the end of the MCQ exam. Two quick questions, quickly write off, guys. How was the MCQ exam? Was it easy? Was it moderate? Was it tricky? Was it easy, moderate, or tricky? Easy, moderate, tricky. I want all of you to answer. Request all of you to answer because future areas will be based on this. Cool. So let us see. So easy, nobody has told. Yes, it is not easy, guys. It will either be moderate or it will be tricky. So 2/3 of you have told tricky. Last question. What about MCQ exams in the future? Please make it easier. Please keep the same level, or please make it tougher. So what do you think I should do, my dear friends? I will work on it. We will have such wonderful sessions together. Many things, you will get to know in this particular MCQ series. Cool. So some of you want tougher, okay? Some of you want same level, okay? Cool. So let's see the leaderboard, my dear friends, who did this well. So Geetanjali has scored 19 out of 27. So Geetanjali will be number 1. Anushri 2 and Nitish, Shrikant, all that. Anyway, it's not important all this, but I'm just saying it's just like a simple competition. So good. So guys, on that note, I hope you like the session. So please, I'll be posting it also on YouTube later. Of course, the edited version. Only we have done 2.5 hours, but maybe like 1 hour 20 minutes video will go. That waiting time I will reduce. Okay, I hope you liked it, guys. So thank you so much for spending two hours with me and enjoying this quiz. Much more is planned. So as and when it is possible, we will do it. Okay, thank you so much, guys. Give me a high five. You guys are gonna rock it. Please watch my marathon video. It will really help you, DT marathon. Everything I've covered in depth. So questions are gonna get tricky. November 23, May 24 and all that. So it is very difficult for you to keep up. So please do it. Watch it. Okay. Thank you so much, guys. Right. Thank you. All of you. Thank you so much. Take care. Have a nice weekend. Take care. Bye-bye. Bye. Take care.